Welcome to our deep dive into GPUS, a stock that's recently become a hot topic due to its wild price swings and unpredictable moves. In this video, we'll break down the technical analysis, highlight the key trends, and discuss what these signals might mean for traders and investors. Whether you're following GPUS closely or just curious about extreme volatility in the market, this analysis will provide a comprehensive overview. Let's start by setting the stage with a look at the recent price action and what has made GPUS stand out in the current trading environment. GPUS has been on a roller coaster ride. Starting at 1.4 in late June, the stock plummeted to a low of 0.37 in early September, but just as quickly it reversed course, soaring to 0.724 by mid-September. This parabolic move was followed by another sharp correction, with the price settling at 0.4578 by the end of the month. Such dramatic shifts highlight the stock's extreme volatility and the challenges of predicting its next move. These swings have captured the attention of both retail and institutional traders, making GPUS a focal point for speculative activity. Most eye-catching move came in September when GPUS posted an extraordinary 95% gain in just 2 weeks. This surge was not only rapid but also unsustainable, as it was quickly followed by a 37% pullback. Such a pattern is typical of speculative stocks, where sharp rallies are often met with equally sharp corrections. The September rally stands out as a textbook example of parabolic price action, drawing in traders hoping to capitalize on short-term momentum. However, the subsequent correction serves as a reminder of the risks involved in chasing such moves. Despite the dramatic swings, GPUS currently shows no clear directional bias. The stock's trend has been marked by breakdowns, rapid recoveries, and subsequent corrections. This lack of a defined trend makes it difficult for traders to establish a confident position. The volatility itself becomes the main feature, with prices reacting sharply to both positive and negative catalysts. For investors, this means that any position in GPUS carries a significant degree of uncertainty, requiring careful risk management and a willingness to adapt quickly to changing market conditions. Volume tells its own story in the GPUS saga. During the September rally, trading activity exploded, with 232 million shares changing hands on September 15 as the price spiked. This was followed by another surge in volume, 246 million shares during the pullback on September 26. The most recent session also saw 246 million shares traded. Such sustained high volume, especially during both advances and pullbacks, signals intense speculative interest and suggests that institutional players may be actively involved, possibly distributing shares to retail traders. Spike in volume at the price peak is a classic sign of speculative frenzy. When prices rise rapidly and volume surges, it often indicates that short-term traders are piling in, hoping to catch the next big move. However, this can also mark the climax of a rally, as early buyers take profits and new entrants are left exposed to sudden reversals. In GPUS's case, the high volume during both the rally and the pullback suggests that large players may be distributing shares, increasing the risk for latecomers. Turning to moving averages, the technical picture is mixed. The short-term averages, such as the 5-day and 10-day SMAs, are close to the current price, reflecting the recent volatility. Meanwhile, the 20-day and 50-day SMAs are below the current price, indicating that the stock is in a transitional phase. Exponential moving averages tell a similar story, with the EMA 5 near the price and the EMA 50 well above it. This combination of signals suggests uncertainty, with no clear trend emerging from the moving averages alone. Price currently trades above the medium-term moving averages, but remains below the long-term averages. This setup often signals a period of transition, where the market is trying to determine its next direction. For traders, this means that the stock could break either way, depending on which group, bulls or bears, gains control. The mixed signals from both simple and exponential moving averages reinforce the need for caution and close monitoring of price action. Look at the technical indicators reveals a generally neutral to slightly bearish outlook. The RSI at 45.43 suggests momentum is neither overbought nor oversold. The MACD is negative, indicating bearish momentum, but the histogram shows a slight easing of downward pressure. Stochastic oscillators and the CCI are both in neutral territory, while the Williams %R and ADX point to moderate trend strength. The Arun oscillator, however, gives mixed signals, reflecting the market's indecision. RSI, or Relative Strength Index, is hovering just below the midpoint, indicating a lack of strong momentum in either direction. Meanwhile, the MACD remains in negative territory, suggesting bearish momentum is still present. However, the histogram slight uptick hints that selling pressure may be easing, opening the door for a potential reversal if buyers step in. These indicators together suggest a market in flux, with neither bulls nor bears holding a decisive advantage. Stochastic oscillators and the Commodity Channel Index (CCI) are both sitting in neutral zones. This means that according to these indicators, GPUS is neither overbought nor oversold, and there is no clear momentum in either direction. Such readings often precede periods of consolidation, where the stock trades within a range as the market waits for new information or a catalyst to drive the next move. Williams %R indicator is deep in negative territory, while the ADX shows moderate trend strength. This combination suggests that while the recent trend has some strength, the market is not in an extreme condition. The Williams %R can sometimes signal oversold conditions, but in this case, it aligns with the overall neutral to slightly bearish technical picture. Arun oscillator is sending mixed signals, with the Arun up at 64 and the Arun down at 96. This suggests that while there have been some recent highs, the downward pressure remains dominant. The Arun indicator is useful for identifying the strength and direction of trends, and in this case it reflects the ongoing uncertainty and lack of a clear trend in GPUS. Linear regression analysis confirms the recent downtrend in GPUS, with a negative slope of -0.0166. The regression intercept at 1.3016 highlights just how far the stock has fallen from its mean level. The R-squared value of 0.869 indicates a strong correlation between time and price decline, reinforcing the idea that the recent trend has been firmly downward. Interestingly, the current price of 0.4578 is above the regression predicted value of 0.2211, representing a deviation of over 107%. This suggests that despite the overall downtrend, GPUS has managed a partial recovery from its lows. Such deviations can indicate short-term reversals or the start of a new trend, but they also highlight the risk of further corrections if the recovery proves unsustainable. Looking ahead to the next trading day, the technical setup suggests an opening price between 0.44 and 0.48. The neutral RSI and slightly improving MACD histogram point to a balanced market, with modest potential for upward movement. However, given the recent volatility, predicting the exact direction remains challenging. The current consolidation near these levels indicates that the market is waiting for a decisive move. Consolidation phase occurs when a stock trades within a narrow range, as buyers and sellers reach a temporary equilibrium. For GPUS, this means that the market is undecided, with equal chances for a breakout to the upside or a breakdown to the downside. Such periods often precede significant moves, as the buildup of pressure eventually leads to a new trend. Key resistance levels for GPUS are set at 0.48, 0.52, and 0.58. With the current price approaching the first resistance at 0.48, traders should watch for potential rejection at this level. Resistance levels often act as barriers, where selling pressure increases and upward moves can stall. Testing these levels can provide clues about the stock's strength and the likelihood of further gains. The downside, support levels are found at 0.42, 0.38, and 0.35. These levels represent areas where buying interest may emerge, helping to prevent further declines. If the price falls toward these supports, traders will be watching closely to see if buyers step in. The distance from current price to key supports suggests moderate vulnerability to pullbacks, especially if resistance holds. Average true range, ATR, is a key measure of volatility, and for GPUS, the 14-day ATR stands at 0.0803. This high value reflects the stock's recent wild swings and suggests that large intraday moves are likely to continue. The ATR provides traders with a sense of the expected range for the next session, helping them set realistic targets and manage risk. Based on the current ATR, the projected high for the next session is 0.5381, while the projected low is 0.3775. This wide range underscores the potential for significant price swings in either direction. For intraday traders, these levels provide important reference points for setting stop losses and profit targets, as well as for gauging the overall risk of each trade. One possible scenario is a resumption of the uptrend, with GPUS pushing toward the 0.52 resistance and potentially retesting the 0.58 level. This would require renewed buying interest and a break above current resistance. Such a move could attract momentum traders, but would also increase the risk of a sharp reversal if the rally fails to hold. Another likely scenario is continued consolidation between 0.42 and 0.48. In this case, the market remains undecided, with neither buyers nor sellers able to gain the upper hand. Such a range-bound environment can be frustrating for trend followers, but it also provides opportunities for range traders who buy at support and sell at resistance. Third scenario involves a deeper pullback, with the price falling toward the 0.38 support level if resistance holds. This would signal that selling pressure remains dominant and could lead to further declines if buyers fail to defend key support areas. For risk-averse traders, this scenario highlights the importance of tight stop losses and disciplined risk management. Given the current mix of technical signals, the most probable outcome is continued consolidation with a slight bearish bias. The market appears to be waiting for a catalyst to break the deadlock, and until then, price action is likely to remain range-bound with a risk of eventual downside if sellers gain the upper hand. GPUS presents an extremely high-risk technical profile. The violent swings in both directions make it highly unpredictable, and the technical indicators suggest a transitional phase with potential for both significant gains and losses. For investors, this means that any position in GPUS should be approached with extreme caution and a clear plan for managing risk. With its extreme volatility and unpredictable moves, GPUS exhibits all the characteristics of a speculative security. Such stocks can offer the potential for rapid gains, but they also carry the risk of violent reversals. Investors should be prepared for sudden changes in direction and should only commit capital they can afford to lose. In this environment, risk management is paramount. Tight stop losses, disciplined position sizing, and a willingness to exit quickly are essential tools for navigating the volatility in GPUS. Traders should have a clear plan in place before entering any position and should be ready to adapt as conditions change. Given the heightened volatility and uncertain technical condition, it's crucial to wait for clear confirmation of directional movement before committing capital. This means looking for decisive breaks above resistance or below support, accompanied by strong volume and momentum. Patience and discipline are key to surviving and thriving in such a challenging market. Sum up, GPUS offers both significant opportunities and substantial risks. The technical analysis points to a market in transition, with no clear trend and the potential for large moves in either direction. For those willing to accept the risk, GPUS can be an exciting but dangerous play. Always approach such stocks with caution, and remember that protecting your capital is just as important as seeking profit.